was Armada Hoffler Properties. We recently rebranded to AHRT, Realty Trust. And our company is a company that has almost 50 years of history in the commercial real estate space. Traditionally, we were a vertically integrated company. We developed and constructed most of what we own. And we're in a process now of transitioning our company and transforming our company to be more focused on where we add the most value in this chapter of our existence. And that is specifically our ability to run commercial properties, commercial in my mind being retail and office properties. And what you've seen us doing is taking our history and creating a more focused and streamlined company, creating a company that is maybe less complex to investors from an underwriting standpoint and more focused on where we, again, create value for shareholders long run, which is our ability to isolate trophy assets in submarkets, right? In secondary submarkets primarily, and drive value there by owning the best asset in the submarket. And we believe that is opportunistic. We believe that we are a sharpshooter in that regard, and we're able to create value in places where others are not. And you've seen this in our performance of the portfolio. And alongside that, we're developing what is a strong balance sheet relative to where we were. Again, we were a company who was focused on creating and manufacturing real estate. And although we still have that capability, we will very much be focused on identifying and owning real estate, high quality real estate that's best in class relative to the submarket. So we couldn't be more excited about where we're headed, about our focus on what we do well and where we add the most value to shareholders. And that's what you'll see more and more of from Realty Trust on a go-forward basis. Sure. The company was founded by Dan Hoffler in 1979. And it was a private real estate concern that was vertically integrated. Again, construction, development for its own benefit. And very successful company, went public in 2013. And the reason it went public in 2013 is because there is a capital availability, obviously, in the REIT markets that allows the company to continue to grow. In addition to that, it gave us the opportunity to play on a broader stage, right? And so I think that marriage of capital availability in the public markets and our ability to perform well in our submarkets, mainly from Maryland down through Florida, was a good opportunity, not only for the company, but for the shareholders to be exposed to the value that was able to be created then at Armada Hoffler Properties, now at Realty Trust. Sure. I think it's well seen for those who followed us that we had and have currently a nice multifamily portfolio that is expected to close in the later part of the first half of the year, second quarter, if you will, in 2026. We decided to exit the multifamily portfolio because the market was not essentially giving us credit for the high quality assets that we own. So our strategy was and is to take that capital, recycle that capital, capture that arbitrage, and strengthen our balance sheet. In other words, we're taking that arbitrage, we're harvesting it and applying it to the balance sheet to create a lower leverage point for the company. Furthermore, we are bullish on the retail properties that we own and that are available in our submarkets. And those submarkets throughout the Southeast have high growth fundamentals and are stable and can produce consistent returns, cash flow growth, as well as rent growth. So our bull thesis is mainly surrounding the retail market. But I'll say our office product has been 96% leased with a very high credit tenant profile for years now. And we, although it may be seen to some as bearish in the market, we are very bullish on the properties that we own because they're mainly office properties specifically, because they're mainly situated in a mixed-use environment, mixed-use ecosystem, as I like to call it, which creates an opportunity for businesses to more successfully invite their employees back to the office post-COVID, if you will, in a place where amenities exist. I often talk, David, about how these ecosystems work, and I'm generally talking to folks who are in New York City, if you will. And I say things like where there are first floor amenities, Ruth's Chris Steakhouse or Lululemon underpinning the office and the residential. But those things truly don't exist in the markets where we play. And that's what we've been able to create, that environment that creates a live, work, play kind of cohesion, which creates not only stability, but also an uplift in the rents that we're able to capture in these environments. Yeah, I think the bear thesis, at least in our case, is the notion or the situation surrounding office more broadly. It's interesting because to me, office is in a situation maybe where retail was in the 2000s, late 2000s. And there's this notion of office is challenging. And in my view, there needs to be a bifurcation. There needs to be a differentiation and a segmenting of the office product. This notion of, all office is created equally is not accurate, right? When you have a T. Rowe Price bond to our conversation earlier, or a Franklin Templeton lease, or Morgan Stanley occupying your building on long-term 10-year plus leases, I think you have to step back and say, hold on, let's look at this office in the micro sense, meaning let's look at this office as a standalone and not against the broader backdrop of what's happening with AI or otherwise. And take a look at the credit, take a look at the asset itself, and take a look at the healthiness or the health of the market and determine, what is actually the asset we're talking about. Because I think to paint it with all with one brush is probably leaving a bunch of value on the table. So our pushback on the bear thesis, i.e. office, is that you need to look at this office for the merits of the office, not as all office created equally. And we think there's bifurcation in the market, and we think there's differentiation that occurs over time, which sets our office apart from the broader office story. The elevator pitch for us is pretty simple. We have almost a 50-year history of creating value in places where others may not have either recognized value or cannot create value. We own high quality properties. We have a real competitive advantage in these secondary markets as what I would characterize or what used to be called a sharpshooter, right? We can identify places that create value that others may have overlooked. I think also folks need to realize the durability of the platform in terms of cash flows, discipline, growth, the balance sheet that we have, and the strength of said balance sheet, and this clearer long-term strategy that we're adhering to from here forward that is creating sustainable value in the ownership of retail and office properties in markets where we have the trophy asset that essentially has a moat around it that continues to create value over time. And I don't mean just today, I mean out into the future. And I think that perspective has to be had in order to really understand and appreciate our story.